Think back, if you can, to the friction of the before times. Standing in the freezing rain on a busy street corner, waving your arm frantically, just praying an empty, traditional taxi happened to drive by. It was miserable, it was unpredictable, and it was entirely out of your control. Then, almost overnight, this absolute magic trick was introduced that completely transformed global transportation. Literally, with a single tap on a smartphone screen, a black car would materialize at your exact location. You could track your driver in real time on a digital map, hop in, and just travel across the city with a level of convenience and honestly VIP treatment that was previously unimaginable. But while behind this revolutionary magic trick was a financial mystery that would go on to stump Wall Street for an entire decade. Welcome to today's Explainer, where we're going to unpack the fascinating story of how this seemingly perfect idea became a dominant global force, and the massive, massive economic challenge that was lurking just beneath the surface.
The hype surrounding this company wasn't just loud, it was absolutely electric. And their expansion strategy? Relentless. They didn't just grow organically, they executed this corporate blitzkrieg, exploding into new cities at a speed that was just unbelievable. Every major metropolitan area became a battleground, and they were planting their flags overnight, forcing their digital infrastructure into urban centers everywhere before anyone even knew what hit them.
And it absolutely did not stop at city limits. This aggressive expansion quickly crossed international borders. They weren't just taking on new zip codes, right? They were taking on entirely different cultures, navigating really complex foreign regulations, and going head-to-head with deeply entrenched, powerful taxi cartels on multiple continents, all at the exact same time. From North America to Europe, Asia to Australia, they were seemingly everywhere all at once.
Now, to fuel this massive, unprecedented machine, they needed an army. And what followed was a staggering influx of drivers. They effectively created a massive, decentralized workforce. Everyday people suddenly realized they had a way to monetize their own driveways. They were turning their depreciating assets, their personal cars, into instant cash machines, joining the platform in absolute droves, and literally single-handedly fueling the boom of the new gig economy.
And of course, you can't have a marketplace without demand. Millions upon millions of users enthusiastically adopted this incredibly convenient new way to travel. And why wouldn't they? It felt like getting a private chauffeur, total VIP treatment for the price of a standard bus ticket. The adoption was so rapid and so widespread, it kind of felt like everyone on Earth had the app right there on their home screen within just a few short years.
So all of this incredible momentum translated into staggering, awe-inspiring financial numbers. We are talking about billions and billions of dollars in top-line revenue. Just picture the sheer volume of cash flowing through this platform every single second of the day. Every time someone took a ride in London, New York, Tokyo, the platform collected fees, creating a breathtaking revenue stream that painted the picture of an untouchable titan. They were without a doubt the absolute darling of the business world.
Okay, let's dive into this, because right behind that curtain of explosive growth and massive revenue was a very profound, almost conspiratorial mystery. For years, despite being one of the most recognized and dominant companies on the planet, despite taking a cut of millions of rides a day globally, this titan was generating all of those billions in revenue without consistently generating a profit. Think about that for a second. If you are literally the middleman for a massive chunk of global transportation, how in the world is the bank account empty at the end of the year? How could a company with millions of loyal users and a seemingly perfect product still struggle so deeply financially?
Section 1. The Global Growth Illusion. We're going to unpack the biggest assumption in business right now, that high revenue automatically means strong profitability.
Section 2. The Network Effect Strategy. Let's look at the actual engine behind this massive growth, because they wanted to be a global platform, not just another taxi company.
Now, what's really interesting about this is how they got into this seemingly impossible situation. You have to understand the gravity of their growth engine. Building a two-sided marketplace is incredibly hard to start, but once the flywheel actually spins, it becomes a self-fulfilling prophecy known as the network effect. It's a super powerful, self-reinforcing loop. The more drivers brought onto the system, the shorter the wait times became, making the platform incredibly attractive for customers. And as more customers opened the app looking for rides, the demand spiked, making it incredibly lucrative for new drivers to sign up. This loop, this irresistible gravity, is exactly what drove their aggressive, incredibly expensive expansion into market after market.
To fuel that loop, a very specific mindset took hold, and it basically became an absolute religion in Silicon Valley during the 2010s. The venture capital playbook of that era dictated a land grab mentality. Capture the entire market today, become a monopoly, and hey, we'll just figure out how to turn the profit faucet on tomorrow. Growth was the only metric that mattered. Because of previous tech sector successes, investors fully supported this. They poured massive, historic amounts of capital into customer acquisition, aggressive marketing, and driver incentives, fully believing the narrative that whoever won the market share war would eventually win the ultimate financial war.
Section 3. The trap of subsidized rides. Let's peel back the onion to reveal that revenue alone absolutely didn't tell the full story.
And this brilliantly illustrates the core problem, because that rapid scale was artificially fueled by heavy spending. Think of it like this. For every ride you took, the company was essentially handing a $5 bill to you, the rider, and handing another $5 bill to the driver. They were caught in a massive subsidy trap. It's this impossible balancing act. On one side, customers became completely addicted to artificially low, cheap ride prices. On the other side, drivers demanded stronger earnings to keep their cars on the road. The company was heavily subsidizing both sides out of its own pocket, essentially using investor cash to pay for part of your daily commute just to keep that network effect spinning. Squeezing a profit out of that middle space became nearly impossible because the true cost of the ride was simply being hidden from everyone.
Section 4. Why scale did not work. Let's talk about the common myth that simply getting bigger would automatically fix the math.
During those high-flying years, there was this very comforting assumption that sheer volume would magically dilute the costs and make them incredibly profitable. But that is the biggest lie in the tech economy. Scale alone absolutely does not eliminate ongoing operational costs. Look at all these structural economic pressures. Every time they conquered a new city, they had to hire an army of local lawyers to fight municipal taxi laws. For every 1,000 new drivers onboarded, massive commercial insurance premiums skyrocketed. The world-class tech infrastructure required to track millions of cars in real time, that isn't a one-time purchase. It's an absolutely massive ongoing utility bill. Add in global customer support and endless marketing campaigns to fight off intense local competition, and you see that these expenses scaled right alongside the revenue.
Let's move to Section 5, the real cost of growth, and see how this builds toward a major reckoning. Because eventually, the music stops. As the company matured, the atmosphere in the broader market began to change. The era of cheap money and endless venture capital was coming to a close. The sugar rush of pure growth wore off, and public markets started shifting their expectations. Investors stopped looking at graphs of user growth and started looking aggressively at the bottom line. The question shifted abruptly from, how fast are you growing, to a much harsher reality. When does this actually become a sustainable business? They had to face the very cold fact that a powerful growth narrative is fantastic for an early-stage startup, but long-term business sustainability eventually matters more than anything else.
This creates a deeply claustrophobic puzzle with no easy way out. Just look at the levers they had to pull. If you pull the first lever and lower prices to attract customers, you completely destroy whatever razor-thin margins you had. If you pull the second lever and raise incentives to keep your vital driver fleet happy, your operational costs absolutely explode. And if you try to outrun the entire problem by expanding into fresh new markets, well, that requires massive new spending and capital burns. It perfectly demonstrates that platform growth can completely mask underlying profitability difficulties.
So the crucial point is really these core takeaways right here. These aren't just textbook concepts. These are the hard, inescapable truths of the modern tech economy. First and foremost, top-line revenue is absolutely not the same as bottom-line profitability. Moving money around is very different from actually keeping it. We see that platform businesses almost always prioritize scale before sustainability, but that is a highly dangerous game. Using subsidies will absolutely accelerate your growth, but they create a ticking time bomb of economic pressure. Powerful network effects are incredible to possess, but as we've seen, they do not magically eliminate the harsh reality of ongoing operational costs. And ultimately, no matter how disruptive your technology is, financial discipline and realistic economics are required to survive.
There is absolutely no denying that this company completely transformed the way the world moves, building one of the most recognized and utilized digital platforms in human history. But their story leaves us with the ultimate test for any modern technology platform. The transition from aggressive scaling to realistic, durable economics is incredibly fraught. Generating billions in revenue might look deeply impressive on paper, but the real question you have to ask yourself is this: can a business actually turn that massive growth into sustainable, long-term value? It's definitely something to think about the next time you tap